So with regards to stamp duty land tax, have you any thoughts on that and how we can help our clients?
So stamp duty land tax is an interesting topic, of course. Much has changed over the last 12 to 18 months with regards to it. There are two types of stamp duty land tax typically. There's what's called residential and there's non-residential. If it happens to be a residential property you're buying, then you could incur the 3% or enhanced stamp duty land tax as well. And for our clients, that can be a real issue if they're buying properties either in their limited company or in their personal name above and beyond the first property they own, because the enhanced rate occurs once you've already got one property in your name, in your personal name, and for limited company it kicks in from the very first purchase you're making. Helpfully though, there is non-residential stamp duty land tax, and it's a slightly less expensive tax, if I can call it that. Particularly helpful if you're buying mixed-use properties. So
yes, that's available on commercial and also mixed-use, so
things
shop
like,
and then a flat above, something like that.
You've got it, absolutely, and you'll pay the non-residential stamp duty land tax on those, which takes away the 3% enhanced, which can be very helpful for our clients. Now there are all kinds of reliefs, and I know that we've been discussing them and supporting our clients with those. Do you want to tell us a bit more about the reliefs available?
Yeah, well, there's usually two main reliefs that you can get, and that really depends on sort of when you're looking at moving a various number of properties into either different names or selling them, or if you're going to move into a limited company, as you say. And that will potentially be sort of multiple dwellings relief, so that's any properties 2 or more, up to 6 essentially, because then there's another relief potentially available. And multiple dwellings relief will just allow you to average the stamp duty, so instead of paying stamp duty on the full amount, the gross amount of the sales value, you're allowed to average that by the number of properties that you transfer, calculate the stamp duty on each average value, and then gross that back up again by the number of properties. And that sometimes can save thousands of pounds in terms of stamp duty land tax. The second one is, as I say, is the commercial rate. So 6 or more properties if you're transferred at the same time, then you can take advantage of the commercial rates. And there's always a calculation to be done as to whether or not the averaging relief under multiple dwellings relief or the commercial rates which one works best essentially. I typically find it's still the averaging one, the multiple dwellings relief, but it just does vary.
Okay. And as another point on this particular issue, the commercial or non-residential stamp duty land tax charges, of course, does not include the 3% enhanced value. So if you're buying true commercial properties, so warehouses, offices, that kind of thing, or you're buying a property that is a shop with flats above, then the 3% enhanced isn't going to be a feature of the tax you're going to pay.
Okay. And it's important to, again, speak to us about these sort of things, because there is a useful flowchart that HMRC offer in terms of when you should calculate the amount of enhanced rate or whether or not you can, because there are certain things around whereby if you replace your residence, for example, your main residence, then even though you may have more than one property and you sold your main residence, then usually the normal rates of stamp duty would apply instead of the enhanced rates. So there's ways and means around some of the stamp duty land tax, but and HMRC do assist with that with regards to their flowchart. Another thing I'm finding with clients is regards to if they want to transfer the ownership of properties, things like that. So the stamp duty is really based on the open market value of the property. So if people are transferring properties between each other or sort of deeds of trust to sort of move sort of ownership of that property, then essentially they might gift their that share of the property to either their partner or to someone else. And with the gift, obviously, there's no consideration, so potentially no stamp duty available. But if they do take on mortgages, then that's another form of consideration that HMRC would utilise in terms of calculating stamp duty. So if they do take on, for example, 50% of the mortgage, and that mortgage is £100,000, for example, and they take on 50% of the property, then essentially they're going to take on 50% of the mortgage, and so £50,000 would be liable for stamp duty, on which HMRC would sort of try to claim their stamp duty at the enhanced rates again.